One of the most important skills for an investor to make better trading decisions is chart reading. Candlestick charts are one of the most used types of charts, along with line charts, bar charts, and point and figure charts. Candlestick analysis is all about continuation, indecision, and reversal patterns. Fine details, secrets gained and handed over from one trader generation to another. This technique brings another light to market psychology. Also, it can help you better track market movements. This article will focus on the basics of candlestick reading. You'll understand how and why you should include them in your trading strategy to better enter and exit the markets. Also, it's great for measuring volatility and understanding how to take advantage of it. As you may know, the first thing to do when investing money on the markets is to choose a trading strategy. This strategy will be the cornerstone of your trading success. You will choose it depending on your risk aversion, your trade capital, your availability, your time horizon, and above all, your personality. Trading with candlesticks started in Japan in the 18th century with the rice trader Munehisa Homa. He's said to have started to record rice price movements, OHLC, open, high, low, close, and spot patterns and signals. This technique stayed in the Japanese trading rooms of important banks and financial institutions for several centuries. It continued until Steve Nixon popularized candlestick technique in the Western world. Candlesticks can give you clues about when prices are about to reverse, also called reverse patterns, or when they're losing momentum. Also, if the existing trend is weakening, indecision patterns, as well as when prices will continue their current direction, continuation patterns. For this reason, it's a great technique for aggressive trading, buying on a support level and selling on resistance levels. It's also called a classical approach, buying after breaking through a resistance level and selling after breaking below a support level. That's it for now. On our website you can find more posts as well as calculators and other financial tools. I hope you enjoyed it, and don't forget to subscribe to our podcast channel on YouTube. We would love to know how you use candlestick levels in your trading, so feel free to share them on the comments below.